Welcome, everybody, to today's NIPay event. I'm Ron Mazurski. I'm the founder of NIPay and a board member. Today's event is Unlocking the Power of Data Aggregation and Open Banking for Financial Institutions. I want to thank Barry Tooker and Ed Delheim for putting this panel together. It's a great group of people and should be a very interesting session. I'd also like to thank our sponsors for the event, Davis Wright Tremaine and Further Advisory. Just a couple of heads up, we have two more events coming up planned already for the next 2 months. In August, we have Banking on Cannabis. Should be a really interesting session, and welcome everybody to come and partake. Well, only in the session, partake otherwise if you want to. And
yeah, you had to do that, Ron. I knew you couldn't let that go by without sticking that in. Okay.
It was up there, served up. And in September, we have small business banking post-pandemic. We expect today to have a 45-minute panel, give or take, plus Q&A, then two 15-minute or so networking sessions based upon how many people sort of hang around, and we encourage everybody to stay for it. We have each of our attendees will be participating, as well as the speakers for today's session. I'd like to ask everybody that's on to put yourselves on mute and to turn off your videos so that we don't have any other distractions. And at this point, I'd like to turn over the session to our moderator, and that's Barry Tooker. Barry, off to you.
Thanks, Ron, and good afternoon, everybody. As Ron said, I'm Barry Tooker. I'm the principal at transactionbanker.com. It's a payments consultancy. And data aggregation and open banking are transforming modern finance by providing customers more control over their financial data. Data aggregation allows customers to access their financial data from multiple sources in one place, giving them a more comprehensive view of their finances. Open banking allows customers to securely share their financial data with third-party providers, and this is helping to create a more transparent and efficient financial system, as well as providing customers more control over their financial data. However, with any services such as this, there are both challenges and opportunities. Open banking requires the sharing of sensitive customer data, which raises security and privacy concerns. Banks must ensure that their customer data is secure and customers are aware of how their data is being used. Open banking requires banks to comply with a variety of data regulations, such as the General Protection Data Regulation, the GDPR in Europe, in the UK, and in the Payment Services Directives in Europe. Here in the United States, regulations like the California Privacy Act and the California Consumer Privacy Act, and regulators like the CFPB, the Consumer Financial Review Board. Banks must ensure that they stay compliant with all of these regulations. Data aggregation requires combining data from multiple sources, which can lead to inconsistencies in data quality. Data may be incomplete, inaccurate, or outdated, which can lead to incorrect conclusions. Data aggregation can also pose a security risk, as it involves combining data from multiple sources. This can increase the risk of data breaches and other security threats. Data aggregation can also raise privacy concerns, as it involves combining data from disparate sources. However, with everything like this, there are opportunities. Open banking and data aggregation can allow customers access their financial data in one place, making it easier to manage their finances. This can lead to improved customer experience, as customers can access their data quickly and easily. Open banking and data aggregation can increase competition in the financial services industry, as more customers compare different products and services more easily. This can lead to better deals and more choices for customers. Open banking and data aggregation can provide individuals with more access to financial education and resources. This can include budgeting tools, financial calculators, and other resources to help individuals better understand their finances. Open banking and data aggregation can provide individuals with more information about their finances, which can help them make better decisions. This can include access to more detailed spending and budgeting data. Today, the panel is going to explore the transformative power of data aggregation and open banking and the role of data aggregators in modern finance, and offer insights and benefits and their challenges and available technologies from each of their different unique perspectives. I'm going to ask each of the panelists to introduce themselves and to provide some opening remarks. Serenity, I'd like to start with you, if I may, please.
All right, thanks, Barry. I hope everyone can hear me okay. I'm Serenity Gagan, and I work for Finicity, a MasterCard company. We are part of the open banking arm of MasterCard, and we're focused on financial data aggregation and the services that complement open banking. My role is as a product management leader with a focus on account opening and payments use cases for open banking. I've been in financial services for about 18 years, 8 of those in product roles. And I joined this company May of 2020 because I was very intrigued by the opportunity to shift from, a credit card background into an open banking focus and into financial data aggregation. And very shortly after I joined Finicity, we were acquired by MasterCard. So back into the family of credit card companies, but still able to retain that focus on financial data aggregation, which has been a great experience for me. I'm really excited to participate in this NIPE event today because I love talking about financial inclusion, and financial data aggregation is a key part of that journey. And so it's great to meet you all. Thank you for having me.
Thank you very much. Anil, over to you.
Hi, my name is Anil Mahalaha. I work for Akoya. I'm actually a founding employee of Akoya. I'm a chief evangelist at Akoya, so I go around talking about Akoya and open banking, open finance, and the benefits of it. Akoya is an API-based data access network that provides permissioned customer data to third-party fintechs that provide financial services to the consumers. Akoya is actually a 100% API-based network, so we do not do any screen scraping. I've been in the financial industry for about 35 years. Prior to Akoya, I was with Fidelity Investments for 20 years. Akoya was born out of Fidelity Investments, and then in different roles previous to that. Happy to be here, Barry.
And very, very pleased to have you. Jens, all the way from Belgium. Good evening.
Good evening, everyone. So yeah, my name is Jens Ponnet. I'm the Chief Growth Officer of NG Data. My main role includes solutioning, partnerships, so everything that has to do with revenue and growing, helping our customers and partners adopt our technology. What we do at NG Data is we get value out of data aggregation. So our technology supports, is basically a customer data platform. It supports aggregating, bringing together different customer data that typically sits in silos across the bank, unifying that in customer profiles, doing real-time customer analytics on top of that, and then leveraging those real-time customer analytics to create better engagement, better decision-making in an omni-channel landscape, deciding on how to bring customers through certain journeys that are aligned with the customer life cycle, and also sending insights and analytics downstream to other systems. And what really excites me about the topic of today is really the potential of data aggregation, and that brings in that how do we ask the data, that financial behavior which sits across multiple financial institutions, and the ability to learn from that, and really get value from that, and to reach certain business outcomes that the bank or the credit union or the financial institution wants to reach. So that's what I'm looking forward to. Yeah.
And William, over to you.
Yeah, hello guys. Happy to be here. My name is Will, and I work for a strategic consulting company called SIA Partners. And I'm based in New York City, and for SIA Partners, I handle payments projects in the US. And prior to that, I have 10 years of experience in payments, working for financial institutions, fintechs, retailers as well. And as my accent gives it away, I'm originally French, born and raised in Paris. And I'm looking forward to this discussion, especially having both worked in payments in Europe and in the US. It's really interesting to see how open banking started in Europe, and especially with the PSD2 and the regulation, and see that the model here in the US is a little bit different, and we'll see later on in the discussion what Europe can also teach us from an open banking perspective as well.
Again, thank you all for your time and sharing your insights here with us this afternoon. I should add that as for those of you who are in attendance, if you have a question, if you would please drop it in the chat, and we'll be happy to to take questions throughout this this discussion and discussion and dialogue and debate here. So let's start with a simple question that's not so simple. How does data aggregation help customers in open banking? And Serenity, can I start with you?
You certainly can. I think it's important to think about who the customers are in open banking. I think that there are a lot of different financial institutions, fintechs, and data service providers who are interested in having access to financial data in order to provide services to consumers and small businesses. And so, there are some core use cases that I think align really well with data aggregation. One of those is consumer lending and, credit underwriting. I mentioned earlier, we're passionate about financial inclusion, and this is a key area where if you think about your traditional experience, in lending, to receive a loan, get a mortgage, there's some core verifications that happen that are standard verifications. You have to have, a certain financial history or a certain established credit. And the industry is learning that having alternative insights, like somebody's spending behaviors and what their financial portfolio looks like beyond those traditional underwriting inputs, you can expand the lending world and include more people. And that's a key piece of it. Another thought is around, verification services are a core part of financial data aggregation, and being able to connect consumers' financial lives and their financial accounts into the experiences where they're trying to make payments or move money, even whether within their own financial portfolio or in the transactions they're making outside of their personal lives. And so, mitigating fraud by connecting those financial accounts into the experiences that are becoming more and more digital makes a big difference in how our financial data can support our everyday lives. And so companies who are providing those services to consumers and to small businesses, having access to financial data to unlock those experiences is a value add throughout the ecosystem. I'll start there.
Thank you. Yeah, Jens, from your perspective and NG Data's perspective, how do you see data aggregation helping customers?
Yeah, so it actually allows the bank or financial institution to create a more holistic profile on the customer. So what the bank will be able to do is not only take their first party data, which gives you a view on their digital behaviors, gives you a view on their spending behaviors, but also take into account, what are their customers doing outside of the bank, because typically you would have different types of banking relationships across your landscape of banks that you have accounts with for different products. So bringing that all together, what the bank will be able to do, not only for internal purposes, for better decision making in departments such as marketing, where we talk about next best actions, next best experiences, but also leverage it for better AI modeling, right? That helps us predict churn better, retention strategies. That helps us look at optimizing revenue by offering certain products, but also on the risk side. So KYC, helping the bank make better decisions, to what Sarah actually mentioned. So it's really that holistic profile of the customer, but also through that data aggregation and building that holistic profile of the customer, really being able to provide certain tools to the customer that can help them with their financial life. So the bank, instead of becoming a company that provides banking services, they become actually sort of a life partner that helps them budget, that helps them plan for retirement. So a better, fuller experience with the bank is what they can offer as well. And that's in the external purpose of data aggregation. Yeah.
And then Neil, from Akoya's perspective, how do you see data aggregation and open banking helping customers?
Yeah, it actually helps customers expose them to new service models is really what it does. Service models that the banking platform is unable to provide, or they would have to go through length to provide those services. And so data aggregation and open banking in general helps the customer with buy now, pay later is a great example, right? Where they can use their bank accounts to do that through fintechs, the peer-to-peer payments, P2P payments like Venmo, PayPal, all of that is as a result of data aggregation, as a result of open banking, that the customers can take advantage of. And there's tons of use cases out there, use cases for customers actually who do not have maybe full breadth of or depth, I should say, of credit file, and data aggregation helps them as well in terms of figuring out their behavior pattern, their payment behavior pattern, I should say, and extend credit to them where it would not normally be available. It does, account verification, income verification, identity. I mean, it goes on and on and on in terms of what open banking data aggregation has brought, to the customer.
And Will, from SIA Partners, what do you see when you're talking to your customers? How do you help them understand really what how data aggregation can help them? How open banking can help them from as you're talking to your different customers?
Yeah, it's a good question. I think when you take a step back, you realize that 10 years ago, all this data was, and it still is in some part, controlled by banks. What we started to see with the fintech revolution, I would say 8, 9, 10 years ago, is more and more financial products with niche targets. So for instance, it started with Revolut or N26, and then we spoke about a lot of different use cases. BNPL is one of them, and PFM is also another one of them. And we've seen more and more fintechs going for niche products. And in order to have a great user experience, and all now is about the user experience, they had to know the customer to kind of access to his data to offer personalized services. And so they needed all this data to provide a better customer experience. So and this data is owned by the customers. So that's why it would happen no matter what in some point. So I think it's also when banks and all the financial institutions realize that this data is very important to build and propose new services to their customers those days.
So we talked a little bit about from the customer's perspective. How did data aggregation open banking help a customer? Moving on, what are the benefits to data aggregation in open banking to the banks, to the financial institutions themselves? Again, Jens, from your perspective and the things that you're seeing and the work that you're doing with your customers, with your financial institutions, where do they see the benefits?
They see the benefits in similar ways. So indeed, the holistic view of that customer allows them to do not only indeed MBO, MBX that then drives up revenue or creates better customer experience, but it also allows them to go into, for example, areas around personalized pricing, which helps with increasing margins or maximizing margins, but also just it gives them a view of who their customer is outside of the bank. And I think that is key, because people hold their investments, their loans, not all the banking products in one bank. They typically spread it out where they get a good deal, and it provides the bank the opportunity not only to know what's out there in terms of financial products that they have with other banks, but it allows them also to start targeting these customers with competitive products to extend that relationship, which ultimately drives the business goals of these banks around increasing revenue, increasing profitability of the customer.
And Anil, it's the same question as you're talking to your customers, the financial institutions. How do you help them understand what the benefits are here?
So, it takes some time to convey the benefits to them, but at the end of the day, banks have come around to realize that there are benefits to them in participating in the open banking data aggregation space. It's not just about giving data of the customer, but it is also about getting data on the customer. So it gives the banks an opportunity to participate in the ecosystem. Banking has always been a very competitive space, and banks always provide better products, better services, lower cost to their customers. So participating in open banking not only exposes them to those trends out there that they can leverage. It also gives them a better view of the customer's, share of the wallet, right? So what else is customer doing? Where else they are going? It gives them an opportunity to provide a customer-centric experience on their banking platform. They can leverage fintechs for that. They can leverage other service providers for that. But it gives the financial institutions an opportunity to compete in the open banking space. Banks can also get fraud signals from fintechs. It helps them target the resources they have, the limited resources that the banks have, at least the small banks, to pay attention to customers that may be high risk, as opposed to looking at everybody out there. So fraud is another example of how the banks can leverage. I mean, I can go on and on, but it's a give and take. It's not a one-way street. It's not just about data, but it is about providing your banking customers better experience, better service, better opportunities to improve their financial lives.
And Will, from SIA Partners, when you're talking to your customers and helping them, I guess, understand, what this all means with data aggregation, what it means to open banking, how do you help them understand what the benefits are?
Yeah, it's a good question. I mean, my opinion on this is that at first financial institution really didn't like it, to be honest. There have been some fights in Europe with banks that didn't want to showcase APIs. Their fear was to be disintermediating by either fintechs or big tech companies like Google or Apple that have a legacy to leverage customer data in a more business way that banks used to do it. So I think big financial institution, they tried for a while to combat this kind of open banking thing. I remember financial institutions changing their homepage to avoid web scraping every day, and so there will be a constant fight between engineering to scrap the bank page. So I think at some point they realized that the data is not owned by the bank and it's owned by the customers, and that the customer wanted a different user experience. And all the PSD2, for instance, in Europe was giving a framework to force banks to showcase APIs and do this with a consent and a more secure way of doing things. Here in the US, what's interesting is that I think there's still a mix of scrapping on APIs, depending if companies have agreements, agreements. I'll be looking forward to hearing Finicity and see if most of their data aggregation now comes from agreements with banks and APIs, or is still a significant part of web scrapping. But I think it took time for banks to realize that it was better for them to create some partnerships with fintechs or with other providers to provide new services and share the data in a more secure and consent way with APIs. So I think as a consulting company, our role was somehow to explain to them the benefits of embracing this evolution and trying to find new business streams, business revenues out of partnerships for the benefit of their customers.
Stephanie, he's kind of set you up there. So over to you.
Did. Thank you, William. I think that all of the panelists have shared very salient points about the perspectives that financial institutions have and the considerations. I think, Anil, appreciate your thoughts about, banks as data providers and also as data recipients. And I think we've hit on the majority of the key points. I do want to answer your question, Will, about what the coverage looks like, right? MasterCard Open Banking leads in having data access partnerships with financial institutions. And we think about it mostly in terms of DDA coverage. And so, we're at like 80% plus of the DDA accounts in the US where we have at least an agreement for data partnership. And there's various ways that data is shared. You mentioned, scraping versus API. A lot of folks don't realize that there's a kind of an in-between layer with structured data files as well, that can be a little bit, more secure and more structured. But I think it's important to understand that there are thousands and thousands of financial institutions in the United States, and the long tail is a really long tail. And so, to be a financial data aggregator, you have to have a very robust platform with connectivity with thousands and thousands of data providers. And, some are more digitally, savvy and more technology forward than others. And so the ways that you can retrieve data from those institutions will vary. So on the, that's the data, access side and receiving data from financial institutions. Another thing I want to highlight when it comes to the benefits to financial institutions and participating in financial data aggregation, I think great points were made around the services that can be provided, to bank customers. But something that I have found is a really important use case is the account opening experience. Because it's such a competitive market between financial institutions, everybody's trying to win deposit share. The average consumer has 2.5 bank accounts and various other, types of accounts beyond that. And so if you consider that, consumers are loyal to their financial institution, either because it's too big of a pain in the butt to change, or because they're receiving valuable services and they trust their financial institution. And so in order to remain relevant, it's important for banks to increase their digital adoption. I think COVID has driven a lot of, increase in digital account opening experiences, for example, but that's caused an increase in fraud. And financial institutions are realizing that participating in financial data aggregation in the open banking ecosystem allows them to verify that incumbent bank account that's being used to fund that new account that's being opened on premises, and that you can verify ownership with that. You're doing your KYC of the consumer, but do they own that account that they're using to fund this new bank account? And how can that ecosystem help create greater security and fraud mitigation processes in the account opening experience? And then further unlock greater visibility to that consumer's financial life and allow for offering value-added services that complement that consumer's needs.
Will, any follow-up, or Anil, Jens, to this discussion?
Yeah, I think it's very interesting to see the two approaches, like the approach we had in Europe of making this, I would say, an obligation. I mean, we love compliance in Europe, and so that was our way of dealing with this topic. And I think it gave also to licensing, AIS, PIS, AIS specifically for aggregation and PIS for payment initiation services, because open banking is the first step also of, I'm reading in the comment about FedNow and real-time payments, but you can imagine when you have access to banks' APIs with open banking, that's really the first step of embedded finance, because you can start to trigger and generate ACH or real-time payments from one institution to another, embedded into another service. So I think that's what was the global vision when PSD2 came into action. But what's very interesting is to see that the US, with a more decentralized approach in that field, kind of came out.
William, we lost you for some reason. William? I don't know what happened with William, okay?
Yeah,
I really wish I could read lips.
Yeah, I wish I could too.
No, it's good.
I can, Barry, if you want, I can provide.
Yeah, Neil, could you, in the interest of moving along, thank you.
Yeah, I just messaged him. So.
Yeah.
I think you
And
realize.
Neil, go ahead.
No, I was going to say we are lucky in the United States that we did not have a regulatory-led open banking here, right? Only because regulators don't necessarily have the full breadth and depth of the subject matter expertise to provide, especially in a huge market like the United States, to understand all nuances of open banking and provide a regulation around that. I'm glad that we had a market-led approach to it, and I think Jaime posted about financial data exchange in the chat. So the market-led approach has brought us to a point where majority of the big players in the industry understand open banking, understand the exchange, understand it's a bilateral relationship, understand credential sharing has to be retired, understand, it is all about the customer and the benefit of the customer. And now CFPB, Barry, as you mentioned in your opening, is coming around, and they are the regulators in the open banking space. So now, having let the market innovate for the last 4 or 5 years, and now coming around with the experience of what the market is doing, and then bringing principle-based regulations to the industry will help the U.S. industry open banking, grow by leaps and bounds. And as I understand, it has already taken over Europe and UK in terms of the accounts being shared through secure and reliable permission access.
Jens, anything to add from your perspective?
Yeah, I think most of it has been said, and yeah, Anil, Williams, and Claren are the experts on this topic.
So I guess following on from some of the discussions, obviously open banking is a reality in Europe and has been for a while. What lessons do you think can be learned from the open banking implementations in Europe? Jens, I'll start with you, if I may, and then go to Will.
What lessons can we learn? So I think Europe has a very good framework in place, and I'm just reading it from my perspective around data and then the usage of data and how it actually protects the consumer. The GDPR has built in a number of key rights when it comes to data privacy, such as right to portability, right to be forgotten. So it's just the general framework around data and the protection for the consumer has been very good, and it also forces all like software vendors like us to build in these type of capabilities to make sure that banks and other regulated institutions or companies can adhere to these regulations. Yeah.
Will, from your perspective, I gather you're back with us.
Yeah, I don't know if you can hear me.
Yeah, yes, we can.
Yeah, that's good. I think one big difference is the number of financial institutions. Like, for instance, if I take the example of France with 7 big institutions, you cover 99% of retail banking in France. And as it been said earlier, in the US, we also have lots of credit unions and smaller banks. And so imposing APIs and imposing a way to expose APIs to PSPs or providers is something that maybe you can do when for big institutions, but it's hard to have such an ask for thousands of credit unions. It's not that easy to write down some documentation, to offer a testing environment, to provide some APIs and all the stuff that goes around this. So I think a lesson we learned as well in Europe is that it wasn't that easy to provide something very homogeneous, like an homogeneous framework and an API methodology where you would actually connect easily to the banks. And that's why what we also had in Europe is like actors that were aggregating different APIs from one country to another, or also integrating with other aggregation providers like schemes like MasterCard, like Visa or American Express. So this shows that even though we're saying API is more secure and it's easier, I think as it said earlier, the infrastructure needs to be robust, and it's not that easy, and there is like some tech stack considerations. And so a lesson that have been learned is that it's also a lot about implementation.
And Anil, anything to add there?
Yeah, I think the one thing I look at Europe and learn from the experience is the open banking implementation entity that they have stood up there. I think to William's point, there are, at least by CFPB count, around 9,000 financial institutions that provide, accounts, DDA accounts. So for all of them, and there are 7, 8, I don't know, certainly would know better, 8, 9,000 fintechs out there, right? So for each fintech to be vetted by each data provider, it is not a easy task, and so what open banking implementation entity, at least in the Europe, did is to have like a registry where you would get registered, and then all the data providers wouldn't have to do it by themselves, that they could leverage that registry. So something like that, I think, eventually US would benefit from, as opposed to every aggregator, doing their own vetting, every data provider doing their own vetting. So I would say that that is something that we could learn here. And also, one of the good things about the US that we should not learn from Europe is to create your own API standards, create your own market where the market agrees to the data exchange, market agrees to the use cases. So it's not the government telling you what to do, but the competition coming up with the best approach.
So, Sarani, switching gears a little bit, a kind of a two-part question, if I may. What are the challenges with implementing data aggregation, and what are the risks in implementing data aggregation?
Great question. So some of the challenges with implementing data aggregation relate to the fragmentation that we have in the market, right? So, Anil was just talking about the number of institutions and the complexities. I appreciate the plug in the chat for Financial Data Exchange, a standards making body for, financial institutions to, adopt a standard set of APIs so that we're not all trying to reinvent the wheel. But some of the challenges is really just about evangelizing the value of it to financial institutions and helping them understand, the benefits of participating in the ecosystem. But there have to be really strong standards from a security perspective and a privacy perspective. And so I think Anil mentioned, the importance of, credentialless account authentication, not using stored consumer credentials to log in on their behalf, but rather using the OAuth connectivity process and using exchange of tokens to securely grant access. I think it's important to have transparency throughout the ecosystem to make sure that, parties know who's participating, and always consumer has to be at the center of that and understanding who's accessing their data and why. Because they should be the recipient of value at the end of that value chain. I think that probably buttons up the challenges. What was the other piece of it?
The risks.
The risks. Data security is key.
Yeah.
And so I do think I hit on that a little bit. The risks and the challenges are kind of closely associated there. Data breaches can happen, and every protection has to be in place to avoid those events from happening. And, MasterCard's a very well-known, trusted brand, and trust is at the center of what we're focused on. And I think that has to be the case for open banking and financial data aggregation, because we're talking about people's financial lives, and it's not something that can be taken lightly.
And Jens, from your perspective, the risks and challenges, what are you seeing?
Yeah, so I want to actually come back to the point of what from US versus Europe as well. What I do like, and I thought in the chat, was the whole was on the US system is a bit underrated, because there are approaches like FDX, which is Financial Data Exchange, that kind of sets the way of sharing data across, and that actually massively helps the receivers of data to actually build it into the data models, and then have a unified format to actually build analytics off of. So that's something that I wanted to touch upon as well, which I found key when talking about differences. Yeah.
Good. Anil, risk, challenges?
I think challenges from a banking point of view, setting up consent flow, setting up authorization servers, setting up account selection, setting up token maintenance, throttling the traffic, API gateways. It's not easy. It's a heavy lift, and I think that is a challenge, especially for smaller banks. That is why you see the big banks have implemented API or third-party portal, like CFPB calls it, right? And the core providers have stood up their own API gateways to provide that, but there's a middle segment of banks, and it's quite large that it is a heavy lift for them. So I think that is a challenge. The other challenge is honestly weaning people off of screen scraping, right? So and there's two challenges there in my mind. One is API-based data access limits the data that you can gather, and it limits it to the use case you're providing the consumer for, and it's not, all right, let me gather everything I can, and then whenever they need the data, I can make it available. So I think that would be a little different. That'll take some getting used to for the institutions that had free access to the data. The other one, I think, from a consumer point of view is, and I should care, but I really don't care, right? In terms of, well, you have my username and password, and I just want to give, my friend $50 for, we went out for drinks or whatever. Like, don't make me switch to OAuth and I have to remember my password again. And if I forget it, so I think getting people off of screen scraping onto API-based, you would experience, drop off there. So that is another challenge. So there are a lot of challenges to open banking, or at least API-based open banking. As far as risks are concerned, API-based open banking, if you're using OAuth 2, if you're using FAPI security profile, I can't add anything to anything that, Serenity or Jan said.
So let's go into kind of if you will, a kind of a lightning round, but also there are some questions that are coming in the chat. So can one of you explain a little bit more in detail FDX?
Sure, I could do that. FDX is Financial Data Exchange. FDX is part of the FSISAC, is actually an offshoot of FSISAC. FDX came into being about 2018, I want to say, thereabouts, where a bunch of the banks who were working on FSISAC API working group, and also some of the aggregators, Finicity being the leading edge of it, working on what was called Initiative X at that time. And the two came together, understanding that there is much better, it's more beneficial to the consumer if the two sides participated, agreed on use cases, agreed on APIs, agreed on a standard set of data or standard set of APIs, so that in order to enable interoperability in the industry. So there are, as you say, 9,000 banks out there, and imagine if everyone had their own APIs, proprietary APIs, and all of the aggregators and all of the data recipients would have to deal with all of that, right? So FDX is now, and I'm a founding member of it, just like Finicity was, of FDX. It's 220 member organization. It is a self-governing organization. It is the leading provider of specifications from a user experience point of view, from security point of view, API and data. So it is the de facto standard in the United States. You can go to financialdataexchange.org to get more information.
Anything to add to that? Or
I do think, I'm a big fan of Financial Data Exchange. Anil, I didn't know you were a founding member as well. That's amazing. I appreciate that we have this standards body, because without it, I really do think the US is a bit of the wild, wild west, which does allow us to retain competition and innovation, because we aren't, boxed into a very specific, rigid set of standards. But we do need to be self-organized in order to be effective as an ecosystem. So I really appreciate the value that FDX adds. And I'm under the impression that other regions, specifically Canada, are interested in adopting FDX standards. So it's definitely exemplary with lack of regulation.
Just because it's both timely and topical, with the Fed's announcement today that they're now gone live with FedNow, One of the questions that came in was, will FedNow and real-time payments infrastructure help overcome the legacy data sharing issues? Just,
No.
I guess, an opinion from you folks?
I think it would be another use case.
Ah.
I think it would be, yeah, I think it would be another use case because AIS is aggregation is a first step, but a second stage is initiating payments. And when you have RTP or FedNow systems, what you can imagine is you give consent to issue an RTP or real-time payments, wire transfers from institution A to the recipient you choose. And to me, that's what makes open banking very powerful at the end of the day. And it's kind of the start of embedded finance for a lot of use cases, is that you use a specific application where you agree to give you consent to issue a payment or give information from A to B. So I think this, coupled with the instantaneity of FedNow or ATP, brings in the table even more use cases for open banking.
So Jens, over to you. In addition to that, what other emerging use cases do you see?
Yeah, so a lot of banks are trying to play catch up with some of the fintechs around, like accurate retirement and pension forecasting. We're starting to see more and more of carbon footprint calculations as well, as you bring in more of that spend data. Get presented with what your carbon footprint is, and well, then that gets linked to investing in ESG or donating to sustainable causes. We also see banks just extending their or expanding their credit and lending assessments, as was already mentioned. But it's really focusing on playing catch up, retirement for pension tools, budgeting tools, making sure that they cater to a larger relationship with their customer. That's where I see the most use cases being done right now in banks.
Anil, from your perspective.
Barry, you're talking about FedNow or new use cases?
Just in general, we're using FedNow. What do you see? What do you see emerging use cases for data aggregation in open banking?
I think embedded finance, I think everybody's talked about. I think using the transactional history of a customer to provide them better products and services. I think that has been going on. That will continue to go on. Identity verification is something that the banks can definitely provide, because the customers trust them, and the KYC that they do provides pretty solid identity verification. So those are a couple of things I see. Just on FedNow, just a reminder that the clearinghouse TCH has been providing RTP for a while now. So
5 years.
FedNow is an additional service that would be provided that'll make access for different banks easier, depending on where you want.
It covers more credit unions. So
Yeah. I guess as we're kind of winding down, and want to go into the breakout sessions, what do you folks see as the next steps in data aggregation and open banking here in the U.S.? How do we move the dial? How do we move forward? Anil, I'm going to start with you, if I may.
I think more adoption. I think we should go back to the basics. We should make sure that most of the banks, majority of the banks, have third-party access portals, APIs stood up. And I think we should also, the CFPB is going to ensure that, that the compliance and regulations that are coming, that in at least in 24, 25, folks in the open banking space would be busy implementing those. And then, a lot of fraud use cases are coming up where fintechs are in a good position to offer ATO, account takeover, back to the bank. So there are fraud use cases that I would see emerging.
Jens, from your perspective, what do you see as the next steps in the U.S. journey?
Yeah, I think it's around finding those use cases that really drive the business goals of the bank, right? Which is decreasing revenue, decreasing cost, which can be operational costs or also risk and exposure. So really finding those use cases that would work. And for example, financial well-being and PFM type use cases, they're great for the customer, but how do you monetize that? For example, how do you indeed upsell products for increased revenue, or how do you actually give the customer a better financial capability, better financial literacy, that they won't get themselves into trouble with their finances later on, which will ultimately cost the financial institution more money. So that's where I see the next steps is really making the use cases work and getting the ROI from it based upon data aggregation. Yeah.
Stoney, from your perspective, what do you see as the next steps?
I think great points have been highlighted. One that I would add is a shift beyond open banking to open finance and expanding the portfolio of the view that we have of the consumer's life. So things like verification of employment and, connections to payroll providers, in addition to financial institutions for data aggregation to pull in insights. Somebody's crypto portfolio, for example, has been a bit fringe from a data aggregation perspective. So how can we have a truly full view of the full picture? So I think that, it's going to expand into a broader arena over time. And I think we're going to see a continued shift toward digital adoption. And, there's going to be, a need for the industry to stay on top of the fraud. That's been pointed out, but it can't be iterated enough as an important consideration, because it's, fraudsters are creative and they're constantly coming up with new ways to, evade the controls that we put in place. So having augmented identity insights, segmented services to help, cut that off up front and let the good guys through with a good experience without too much friction, and edging out the bad ones in the beginning.
And Will, from your perspective, what do you see as the next steps?
No, yeah, I really agree with what's been said, and I think the next step is about adoption and the shift, from open banking to open finance. And what we mean by open finance is that this become not only a financial institution thing. This is also used by tech providers, by applications you install in your smartphone. And so basically this would be used without even understanding that you use open banking by millions of individuals in the US. So I think we spent the last 5-10 years with the technology, infrastructure, implementation, and I think the next 5-10 years will be even a more growth in adoption, shifting from open banking to open finance overall.
Good. One last question before we go into the breakout room. And we've talked a little bit about this in a number of different aspects in the last hour or so. But just real quickly, what do you think are the strongest use cases that encourage financial institutions to participate, and how can they make the internal cost benefit calculation? Anil, if I may.
For a financial institution, strongest use case has to be PFM, even though it's been out there for a long time. Companies like Mint have been providing it for 20 years. For financial institutions to get held away data from other financial institutions and understand the customer behavior, understand the customer better, and provide them something like a bill pay that has been very sticky for the last couple of decades, hopefully provide something like that can keep the customer there, and then layer on more services, because once you have the data, then you can pretty much do anything you want.
Jens, from your perspective.
Yeah, I'm siding with Anil there. PFM is from my perspective, really the strongest use case. And yeah, big banks in the States are trying to get there. And I, for example, I'm a Chase customer. They released a lot of budgeting tools, forecasting tools for retirement. So they're trying to indeed monetize that. But I've seen. I've lived in another part of the world in Singapore, and there's a bank there which is called DBS Bank, and they actually have a very, very strong retirement and pension and budgeting tool in their digital banking app, and they've been voted best digital bank in the world. And so, and even that is still behind of what a Mint provides. So there's really still the opportunity for financial services, for banks to really crank it up when it comes to PFM use cases.
Serenity, to you?
I think that the emphasis I would place would actually be around fraud mitigation in the account opening experience. Because I think that the connectivity that open banking provides can vastly change the dynamics of the fraud rates that these banks are experiencing. And so I think there's a strong ROI in leveraging open banking and data aggregation strictly for the account opening experience. I think that alone should justify participating in the ecosystem. And then all the points made by my colleagues here on the panel are absolutely relevant, and the value-added services that can build upon that. The other one I would add, in addition to PFM, though, would be the extended lending insights. Banks are constantly underwriting consumers for loans, and I think there's a lot more that can be done by financial institutions to use the financial data available through open banking aggregation to make more well-informed, well-rounded decisions about lending.
And Will, to you.
That's very interesting, because if we look at the #1 use case in Europe, it's been loans, because we don't have, in most of the European countries, I would say except the UK, we don't have any credit score. So actually, open banking was a very clever way to get to.
I think we lost Will again.
Oh no, right at the most important point.
Oh, I apologize for the connectivity issues. David, at this point, I'm going to turn it over. I'm going to thank. First off, I'd like to thank the panel, and then turn it over to you.
Yeah, well, hi guys, welcome back. I think there's an echo here. Sorry about that. I'm not sure why. But anyway, what we'll be doing now is thank you very much to the panelists.
And thank you all very, very much.
And I hope
you couldn't hear me. Sorry, I don't know what's happening with Zoom. Yeah,
you were making a really important point just when you cut out.
No, yeah, I was just saying in 2 words that if you look at the #1 use case in Europe, it's been loans, because most countries don't have credit scores, and so that was a way to gather the financial data and for banks to assess the risk of allowing loans. And to this point, I want to say that in the US, there is also financial inclusion, because some people don't have a credit score, or they didn't build one. So I think open banking is also a great way for these categories of people to be allowed some credit based on open banking and their financial habits, and BNPL is also a great example of that.
Again, I'd like to thank the panel for sharing your insights and your knowledge, experience, and expertise. David, I'm going to turn it back to you.
Yeah, so we'll be moving now. So thank you very much. We'll be moving